Peter, where do you see this going?
I think that this is going to really result in two trends. One, a trend towards regulated crypto institutions, so onshore players like ourselves, like Coinbase. And then secondly, on the consumer front, you're going to see people shift towards storing their crypto on their own private keys. We have about 85 million signups of people that are doing that today. And I think that trend's going to accelerate. The ultimate reality and the coolest part of crypto is that you can store your funds on your own private key where you have no counterparty exposure. And it's been our mission to enable that for the last decade.
And so you're explaining why this is beneficial because what? Because of what you think happened here with FTX and its own tokens?
Look, I think what happened with FTX is really a tragedy and a total failure of governance. FTX did not have a board. They didn't have a CFO. They didn't have a chief compliance officer. It's really confusing to me how, investors could back that company. But the net result of it is that people are going to swing back to the original ethos of crypto, which is holding their own funds themselves. Like crypto is one of the very few assets in the world that you can custody yourself. And I think we're going to see folks increasingly move back to that model, as well as move to a model of trusting regulated companies in the space.
But this isn't just one of these, companies that a lot of folks haven't heard of having liquidity problems. This is one of the biggest, arguably one of the most successful, seemingly one of the most high-profile exchanges. Peter, it sort of cast doubt on the entire system.
Look, they were very high-profile with the press as well as with Silicon Valley investors. But from a market sizing perspective, they were not a market leader. They had 6 million total account registrations, a couple 100,000 monthly active users. And so while they had a lot of hype and they had a lot of press and they were very popular in those circles, Silicon Valley, the press, they weren't a key integral part of the ecosystem. And I think one of the things that, we're going to have to all ask ourselves is, why weren't more questions asked? We were not an FTX investor or an FTX partner, but to us, it was always confusing. Where was all this money coming from? Why were investors so excited about this company? And, why wasn't there a board? Why weren't there licenses? Why wasn't there, the normal kind of executive team you'd seen?
An advisory board. They had a former CFTC commissioner advising them.
Advisory boards don't matter. What ultimately matters is the governance of a company. Who's sitting on that board? Who is responsible for the conduct of that company? And their entire board was, the two co-founders and an employee.
So ultimately, you and others in the industry are going to have to deal with the ramifications here. Sequoia has marked its $214 million stake to zero. I know you're a venture-backed company as well. Isn't it going to be impossible to get money after this?
I don't think so. I think that investors will increasingly focus on things like good corporate governance, on things like, do you have a board? Do you have a proper corporate structure? And I think that's largely going to be a net positive for the space. Like this was, very much a Silicon Valley momentum play, and we've seen that very clearly not work out.